And we are ready to start. Good evening back and good evening everyone. Looking at this next session, which involves only one target, that is capital gain. Guys, we all love assets. We all aspire to buy that house. We all aspire to buy lots of gold. We all aspire to buy shares, etc. And we want to make money through all of them. And if that's the intention, the government is right behind us to tax on that money, and they want to call it capital gain. So they are opening that fourth room now. We've done house property, we've done PGBP, we've done IFOS, and now we are unlocking the fourth room, that is called capital gain. Guys, I'm going to discuss this very differently with you guys. I'm not going to go section wise here. I'm going to go exam wise. So in the exam, what typically happens is basically they either a big part of a small part of a big question, or either an independent question, they will give you some asset. Now, what is a typical asset that ICAI looks at? I'll tell you typical assets. One, shares. They love giving questions on shares, and people get too bothered with shares, guys. Whether they are listed, unlisted, don't worry, I've got a solution for that. So either they're talking about shares. Second, a very important asset they talk about is a land or house property. You buy a house, selling a house, buying some land, selling some land, etc. And then gold. So these are three assets that they really focus on: shares, land and building, and gold. These are three assets which they're trying to tell you about in this sum. Guys, please remember, buying assets is not a problem at all. Today, let's say if I buy some shares, is the government going to be behind me to pay taxes? No. On buying, there is no capital gains tax. It's only when you sell, and if you sell at a gain, they want to tax you. So that is what their intention is. So in the exam, there will be an asset, and that asset has to be transferred. Transferred basically means either you're selling it, yes, or I can also exchange it, yes, or I can also relinquish my right in it, that I don't want this asset, you keep it, yes. Or it can be extinguishment of an asset, like the asset getting destroyed in a fire, yes. Or it can be redemption of zero coupon bonds, yes. Or it can be compulsory acquisition by the government. Guys, compulsory acquisition by the government is basically just like a normal sale, but instead of you selling it to some random third party, the government comes and sits across the table with you. They decide a mutual price and then they pay that price. That is what is compulsory acquisition. Guys, every time you sell, the first thing that you need to know or you need to agree to is the sale price. Guys, without this, how can you sell? What if the sale price is missing for some reason? Then can we take the fair market value? Maybe, but generally, guys, we have something called the sale price. This is highly manipulated because, you know, higher the sale price, higher the profit, higher the gain, and higher the government's tax, and hence you really want to manipulate this by quoting something less. You try to manipulate it that no, I did not sell my flat for 1 crore. No, I only sold it for 80 lakh rupees, while you hide that cash bag full of cash. You say no, I didn't sell my Unacademy shares for 1 crore. I only sold it for 40 lakhs, while you hide that bag with 60 lakhs rupees cash. So these are situations where you try and manipulate, but some places you can't manipulate. Example, if I'm selling Reliance shares on the stock market, I will not be able to manipulate that because it's obviously on the stock market. So sometimes you can manipulate, sometimes you don't have a chance to manipulate. Next, guys, every asset has been bought, and whenever you bought that asset, you have basically incurred some cost. Either when you acquired that asset, you incurred some cost, or when you improved the asset, you incurred some cost. Example, when I buy a house, that's a cost. When I add another floor to it, that's also a cost. So either cost of acquisition or cost of improvement, that's a cost. But some rare lucky people don't have to pay any cost. Example, when I get some bonus shares, did I pay anything? No. When I get a gift from someone, did I pay anything? No. Then in some cases, you do not pay anything. So maybe the cost is zero, or maybe the cost is what someone else paid for it. Example, if I get a house in inheritance from my grandparents or my parents, then in that case, whatever price they paid, can I take that cost? Maybe. So are they trying to compare the cost and the sale price? Yes. But the sale price is today's value and the cost may be an old cost. How can you compare something like that? Guys, please tell me, can you compare the price of an auto rickshaw or a taxi fare of your parents' time with your times? No, you can't. Same way, how can you compare the sale price with the cost which are at different times? So they say, listen, we can't do anything about the sale price. But this cost, whatever you're saying, if it's really long back, we'll index it. Index basically means we'll increase it and bring it to today's value. Do you have to remember the indexation CII? No. You just need to remember the first year CII, that is the year 2001, 2002, which is 100. And we need to know your year CII, which is 317. Next, guys, does it matter how long or what period you held the asset? Yes, fortunately or unfortunately, it does matter. Period of holding, whether it's long or whether it's short, matters, because long term the government really gets happy. So they give you indexation and they give you very low rates of tax, which are like 10% or 20%, we'll see. And if you know these 5 things, guys, more or less you will get your answer in the exam if you know these 5 things. So now I'm going to go and discuss these 5 things in slightly more detail. First, I'm discussing what is an asset. Guys, please look around and check around you what are the assets. The house that you are sitting right now, is that an asset? Yes. The ring or the earrings that you're wearing, are they assets? Yes. So assets basically is any property, yes, any property, except the following: but, spare, personal, land. Rural agriculture land, which we saw in agriculture chapter, when you sell it, there is no tax. Why no tax? Because that is not an asset only. Personal assets like in my mobile phone, my laptop, etc., they are personal assets, so hence when I sell them, they are not assets. There is no capital gain. But except sad jaw. Sad jaw is sculpture, archaeological collection, drawing, mainly jewelry, that is asset. Next, stock is not my asset. So can I sell my jewelry? A jeweler can sell his jewelry, yes, but he will be taxed under PGBP, not under capital gain. So hence stock is not an asset. And some specified bonds which are really old bonds, those bonds are not assets. So these are not assets. Without that, besides that, everything is an asset. Yes. In the exam, will they give you these 4? No, guys. Mostly they will give you other assets because they want to calculate capital gain. If they give you one of these, then they can't calculate capital gain. Next, holding an asset, staying in an asset does not lead to capital gain, but transferring an asset leads to capital gain. So transfer basically means selling the asset, exchanging the asset, relinquishing the right in the asset. Extinguishment of the asset, like the asset catching fire and getting destroyed. Compulsory acquisition. Conversion. Conversion of what? This is conversion of, you're converting a capital asset into stock. Example, I have one house, capital asset. I buy another house, capital asset. I buy a third house, capital asset. But I don't know what to do with so many houses, so I start a business out of it of selling houses. So am I converting my capital assets into stock? Yes. That is a transfer, but I haven't sold them. Don't worry, we will tax you only when you sell them. And redemption of zero coupon bonds. Example, a company issued a zero coupon bond and you subscribe to it. When you subscribe to it, you paid 85 rupees and now the company gave you 100 rupees back. That 15 rupees is capital gain. The sale price, which is highly manipulated, guys, is checked in 3 cases. Very important. Section 50C, where they check your sale price, again the stamp duty value, but this is only used in case of land and building. This is very similar to section 43 CA, which we saw yesterday in PGB. Guys, if you remember, they will take your sale consideration and they will multiply by 110%. Example, 80 lakh into 110% is 88 lakh. And if your stamp duty value is not within that range, then they will not believe you and they will take the stamp duty value as the sale consideration. Here guys, can we have 120% also? No, because 120% or 20% can be taken only if it's the first sale. And in capital gain, how can it be the first sale? Capital gain means you are bought it and then you are selling it, so hence it cannot be the first sale. If it's the first sale, generally it's in PGBP, just saying by the way. Next, again they will not trust you when you sell unlisted shares. Example, you have Unacademy shares and you are selling it. They will call a CA and they will compare the sale price that you are saying. Let's say you're saying you sold the shares for 80 rupees with the fair market value, which is let's say 100 rupees. Here, is there a 10% margin? No margin. If the fair market value is high, they will take that fair market value. Or last, 50D, if you say you cannot determine the fair market value, or you cannot determine the sale consideration. Example, you are exchanging a rare piece of diamond for a house and you can't determine the sale consideration, then they will determine it using the fair market value. So these are 3 cases and only 3 cases where they can interfere and determine the sale consideration. So guys, in the exam, listed shares, can you manipulate it? No. Will you check? No. Unlisted shares, yes, but it's not always that you have to check this. Sometimes they will give you details to check it. Sometimes you have to believe that that is right. I'm taking period of holding first and then I'll go to cost. Guys, period of holding, if you hold assets for more than 36 months, that is basically, if you convert into years, more than 3 years, then they become long-term capital asset. This is for most assets, yes. The gold that you're wearing, yes. But for some assets, they've made this limit smaller, that is more than 24 months, for which assets, only 2 assets. One is land and building and one is unlisted shares. If these assets you held even for more than 24 months, example, you bought a land or your house or some Unacademy shares, and if you held them for more than 24 months, congratulations, you are holding long-term assets. And here guys, more than 12 months is only given in the case of listed Zoom. What is this listed Zoom? It's a shortcut, of course. Any listed security, if you held for more than 12 months, it's long term. What do you mean by listed? Listed where? On a tree? No, listed on the stock market. Example, Reliance shares, yes. Debentures also, yes. Mutual funds also. Anything that is listed, guys, anything. And if they don't use the word listed in the exam, they will use the word STT, that you've paid STT. STT is the toll that you pay. When you use a highway, you pay a toll. Same way, when you use the stock market's infrastructure, you have to pay a STT. That is called Securities Transaction Tax. That transaction tax is paid when you're buying and selling shares, and in case of mutual fund, only when you're selling mutual funds you pay. Next is zero coupon bonds, units of UTI, and units of mutual fund. But which kind of mutual fund? Equity oriented, where 65% or more of the money is invested in equity. That is called equity oriented mutual fund. Guys, that is listed Zoom. So 12 months, 24 months and 36 months is long term, and long term has so many benefits, guys. You will see ahead, long term has lots of benefits. So then we come to the last concept, which is cost. Obviously, guys, if you bought something, it will involve some cost. Cost can be either cost of acquisition or it can be cost of improvement. Recently, in the recent exam, they had an example of a ring. It was a gold ring which you bought for 45,000, but then you put a diamond in it. So diamond is the cost of improvement. Cost is very unique, and cost is where all the marks are, guys. If you buy an asset very, very long back, before 1/4/2001, then is there a benefit? Yes, the government says in this case, you can either take the price that you have paid if you know that, or you can take the fair market value as on 1/4/2001. Yes. So you have an option. Yes, you have an option. Whichever is higher, obviously you will take, because higher the cost, lower will be your gain on paper. So if the asset is bought before 1/4/2001, you can take the fair market value as on 1/4/2001. Yes. Only thing, in case of land and building, you can still take the fair market value as on 1/4/2001, but it should not be more than the stamp duty value as on 1/4/2001. So stamp duty value becomes like a ceiling. Yes, it becomes a ceiling. You know what is a ceiling, guys? Ceiling is the maximum amount above which you cannot go. So let's say there's a house which has been bought before 1/4/2001. Let's say the house was bought in 1998 for, let's say, 10 lakh rupees. On 1/4/2001, the fair market value, the FMV, is 18 lakhs. Will I take 18 lakhs? Yes. But if it's land and building, just once check the stamp duty value also. This 18 lakh cannot be above the stamp duty value. The stamp duty value is 17 lakh, then you will be restricted to 17 lakh. And if it's 19 lakh, then no problem. So it acts as a ceiling, yes, only in case of land and building, yes. Next, any bonus shares that you acquire will be always zero, yes. But if the bonus shares are acquired before 1/4/2001, can I take the fair market value as on 1/4/2001? Yes. Even for bonus shares, yes, guys. Is that a benefit? Yes. Any higher cost is a benefit always. If I bought some right shares, then whatever I paid to the company, and if the rights have been acquired from some third party, then whatever I paid to the third party, both will be my cost. Example, I bought some right shares from a third party for 10 rupees and I paid the company 60 rupees. So my cost of acquisition is 70 rupees. Next, for intangible assets, guys. Yes, intangible assets includes goodwill, patent, copyright, trademark, tenancy rights, loom hours, that is the right to use the loom for particular hours, and stage permits, that means permits to use buses, etc. For intangible assets, my cost of acquisition and cost of improvement is always going to be nil, yes, unless I have purchased it. So if Apple has built a goodwill from scratch, or let's say an Indian company like Ola has built a goodwill from scratch, then in that case their cost of acquisition and cost of improvement will be considered to be nil. Yes, will be considered to be nil. But what if you purchased it? Example, you bought a company, let's say in India we bought Tata Motors bought Jaguar Land Rover and they bought the brand also. Then in that case, whatever you have paid will be the cost of acquisition and cost of improvement will always be nil. Guys, cost is very unique. There are 1-2 more details on cost. Please watch out. Guys, if in the exam they give you a date which is 31st Jan 2018, then you know something very unique happened on that day. I'll tell you what happened on that day. This was the day before which, if you had a long-term capital gain on listed EUU. Example, listed EUU. What is listed EUU? First, let me tell you, a listed equity share, or a listed units of equity oriented mutual fund, or a listed unit of business trust. This business trust we will see at CA final. So listed EUU, if you had bought before this date, example, simplest example of listed EUU is a Reliance share on the stock market. If you bought a Reliance share on the stock market, and if you held it for more than 1 year, long-term capital gain would have been exempt before this day. And after this day, Arun Jaitley changed it and they made it taxable after this day. So guys, before that it was exempt, after that it was taxable. It is almost like you going into a restaurant and the restaurant has a board saying 100 rupees unlimited meal. And you go in the restaurant and you start eating it thinking 100 rupees unlimited meal, and suddenly they change the board to 1000 rupees. Guys, is that fair? No, that is not fair. So here, Guys, when they changed the exempt to taxable on 31st Jan 2018, Arun Jaitley, he said that listen, I know you guys are hurt, and for that I'm going to give you a new cost of acquisition for these shares. What is this new cost of acquisition? It is basically the difference between higher and lower. Let's check what it is. They say your original cost, whatever you bought these shares, let's say you bought a Reliance share for 1000 rupees. So your original cost of 1000 or the new cost, whichever is higher. But what is this new cost? Original cost, so we know. What is this new cost? So for that, they said new cost is your selling price. Let's say you sold this share for 2500, or the fair market value, that is the highest price on the stock market on 31st Jan 2018. Let's say that is 1800, whichever is lower. Guys, I know this is complicated, but try and understand this. First, how will you identify this happening in the exam? Because they will give you the date 31st Jan 2018 in a year 21-22. Why are they giving you 31st Jan 2018? Because they are telling you that listen, think about Arun Jaitley's new cost. And the shortcut is higher and lower. First, higher. The original cost is obviously your cost, or the new cost, whichever is higher. Is that a benefit? Yes, higher cost is always a benefit. But what is the new cost? The new cost is basically whatever price you're selling this Reliance share for, or on the fair market value on that Arun Jaitley's speech date, what it was. So lower of these two. So 1800 is your new cost, and 1800 and 1000, which is your cost of acquisition. Now 1800 will be your cost of acquisition. So higher and lower, one shortcut. And Arun Jaitley cost 31st Jan 2018, another shortcut. So this is when you have to take the new cost. There are some conditions, guys. First, it should be a listed UU. That's one condition. Next, it should be bought before Arun Jaitley's speech date and sold after the speech date. So it should be bought before and sold after. And it should be long-term capital gain. SP is selling price, SP is sale price. So you're selling the share for 2500. So guys, if you want, I'll give an example of this on the next page. Guys, let's say this is the year 2016. Life was good, listed UUs are exempt. So you bought a share for 1000 rupees on this day, knowing fully well that this listed UU, if you hold for more than 1 year, it will be exempt. So guys, did you buy it on 2016? Yes. And you kept holding it, thinking that if the price goes up, you will be exempted. But something happened on 31st Jan 2018. The government says, listen, now on this listed UU, which was earlier exempt, now we will tax it. Guys, this was a shocker to many people who had bought, because they were thinking that they will be exempt on this share, they will have to pay no tax. But suddenly they got very worried. But the government says, don't worry, whenever you sell the share, let's say you sell the share in 2021 and the selling price is 2500, that time you come to us and we will give you a benefit. Okay. And just saying, the fair market value of this share on 31st Jan 2018 was, let's say, 1800 rupees. Now guys, how do I know there is Arun Jaitley cost to be calculated? Arun Jaitley cost is just a shortcut, guys. How do I know that a cost has to be calculated? First check, is this listed UU? Yes. Second check, is this long-term capital gain? Yes guys, listed UU means after 1 year it is long-term. So is it long-term? Yes, second condition fulfilled, it is long-term. And has it been bought before Arun Jaitley's speech date and sold after Arun Jaitley's speech date? Yes, before and after also is done. So if all these three conditions are fulfilled, now guys, don't worry, Arun Jaitley has a master plan for you all. The Arun Jaitley cost is higher and lower. Higher of what, guys? Whatever is your original cost. What is the original cost? You bought the share for 1000 rupees. Or a new cost. Now what is the new cost? Guys, the new cost is lower of whatever you are selling it for, 2500, or whatever is the FMV as on that particular date, that is 1800, which is lower, guys, 1800. So I'll put 1800 here, and which is higher, 1800. So Arun Jaitley cost is 1800. And now if you calculate your capital gain, what is the selling price? 2500. What is your new cost? 1800. So what are you going to be taxed on? Only 700. Actually your gain is 1500. You bought it at 1000, you're selling it at 2500. Your gain is actually 1500, but Arun Jaitley's cost says that during this period, whatever your gain was, we did not tax you, because you are only taxed from 1800 to 2500, that is on 700. I hope you understood. This is Arun Jaitley cost. Don't worry, a little by hearting, a little practicing will get you there on this question. Alright, so these were all details around cost of acquisition. Just one second. The section for all the cost is section 55, but guys, one suggestion, don't get bothered by sections in PGBP and capital gain. As long as your concepts are really strong, and focus on the concepts, because what my past experience has told me is that people get so lost in the sections that they forget the others. So if you want to remember sections, residential status. If you want to remember sections, IFHP, deductions, TDS, these are return of income. These sections are golden, but these sections honestly are not important. The right answer is more important. But of course, if you can remember the section, nothing like it. Just 1 minute. All right. So guys, this is the cost section. Now some more details, guys. So this, whatever we discussed, will help you calculate your capital gain. So you will be able to calculate your capital gain. So in the exam, if they want you to calculate capital gain, this will help you to calculate your capital gain without any problem. Yes, let's try and solve a sum on this and see with this limited knowledge, can you calculate capital gain? Here we go, guys. Everyone, over to this question, please. She sold her gold bracelet jewelry used by her for personal purposes on 1st May 2021 for 5 lakh. Guys, please tell me, is this an asset which is being sold? Yes. You need to find out only 5 things, guys. A, T, S, C, P, and you will get your answer. Is this an asset? Gold. But it's a personal asset, still it is an asset. Is it sold? Yes. What is the sale price? The sale price is 5 lakh rupees. I am writing the sale price here. It is 5 lakh. Sale consideration, it's called in capital gain language. Now guys, do you have to check it? No, it's not land and building. It is not unlisted shares, so I don't have to check anything. Of course, guys, if there is any brokerage, etc., you will minus, but I don't have any brokerage here, so I'm not minusing here anything. Now, cost and period of holding. Guys, you acquired something in 2005 and you're selling it in 2021. Is it more than 36, more than 24, more than 12, more than 48, more than 60 months? Yes. So it is definitely long term. But anyways, which category does it belong to? It's gold. So it's not listed Zoom. It's not 24 months, it's 36 months. So is it long term? Yes, it is long term. Now you know long term gets indexation, guys. So let's see the cost. Please tell me, how much did you buy it for? For 40,000 rupees in 2005. So is that your cost of acquisition? Yes, 40,000 is your cost of acquisition. And did you embed a diamond in it? Yes, 50,000 is your cost of improvement. But guys, please tell me, are these costs being compared to the sale price of today? Cost of so many years back. So will you index it? Yes. So let's index them, guys. How do you index them? I'll give you one example. You take 40,000. Which year was it purchased? In the year 4-5. So 4-5 is 113. So divide by 13. And which year is it being sold? In the year 2021. That is 21-22 is 317. So this is how indexation is done. 40,000 divided by 113 into 317 is basically 1,12,212. So I will mark this as 1,12,212. And same thing, I have to do indexation even for improvement. Yes, whatever improvement, as long as the asset is long term, all the costs will be indexed. So 50,000, this has been incurred in the year 7-8. So this is 7-8 divided by 129 into 317, which is basically 1,22,868. So you minus these two. So 5 lakh minus 112,212 minus 122,868, which gives you 2,64,920. Is this a gain and is this long term? Yes, long term capital gain. Guys, you didn't have to know anything else for this except ATSCP and you would get your answer very, very easily. So remember, I'm reminding you guys, don't get lost in the various sections of capital gains. Do what I'm telling you, especially before the exam, because today you might spend hours and hours doing a section called section 47, which tells you the situations which are not transfer, amalgamation, merger, this, that, and then nothing of that comes in the exam. Because you're at CA Inter. At CA Final, of course, this chapter, the amalgamation, the merger, etc., they come in the exam. But at CA Inter, they're going to go very basic on this chapter. So this is how you calculated, guys, your capital gain. This part is over. Now, how do you save your capital gain is the next part, guys. Saving capital gain or exemptions from capital gain is the next part of the chapter, which is important, yes, but not as important as calculating capital gain. The next part is saving capital gain. One in about 3 or 4 papers has a question on exemptions in capital gain. So it's not the most important, but it's still there. So let's discuss. Guys, let's say you've sold your house property, which was basically a long-term capital asset. You held it for more than 24 months. So I'm just putting it here. This is your house property. Was it a long-term capital asset? Yes. And you sold it and you calculated ATSCP and you had a long-term capital gain of 50 lakh rupees. The moment you calculated a gain, the government knocked on your door. Listen, please pay tax on this. We want tax on this. But guys, in India, we don't like paying taxes. Also, maybe you didn't sell this house to make money. You sold this house because you wanted to buy another house. So you told the government that, government, listen, don't tax me. Yeah? If you tax me, I'll not have the money to buy another house. So they said, oh, you sold this house to buy another house. Then you should have told me. I will give you an exemption under a section called section 54. Provided you fulfill some conditions. Okay, so what are the conditions? First, it should be a long-term asset that you're selling. Okay. Then whatever gain you've made, you have to invest in a new house property. If you are acquiring a new house property, you have to acquire it within 2 years from the date of transfer. So if you transfer today on the 16th of August, then 2 years starts from today. And if you're constructing another house property, then you have to construct it within 3 years from the date of transfer. But purchase, you can also purchase 1 year before, and construction you can also start before, no problem. So guys, you have to purchase an asset 1 year before or 2 years later from the date of transfer. Yes, so I'll just give you a diagram here. So if this is the date of transfer, you have to purchase within 2 years later or within 1 year before. And if you are constructing, then in case of construction, you have to complete it within 3 years later, and you can start construction before, no problem. Next, you have to invest this long-term capital gain. That means if you made 50 lakh, you have to invest the 50 lakh. What if I invest less, 44 lakh? Then I'll give you exemption also less. It's almost like how hard you work, that many marks you'll get in the exam. What if I work hard less, I do less hard work, then you'll get less marks probably. I'm not sure about this in CA exams though, but that's what this is. So 50 lakh rupees, if you spend ahead, you'll get the exemption. So let's say you bought a new house property for 52 lakh rupees. Is that okay? Yes. So you will get an exemption under section 54 of the entire 50 lakh. Yes, of the entire 50 lakh. So you will not land up paying any tax. Congratulations. But there are some more conditions. You cannot sell this house for the next 3 years from the date of acquisition or the date of construction. You cannot sell this for 3 years. That means you should hold it close to you for 3 years. But what if I get a very good price and I want to sell it within 3 years? Can you stop me? No, I won't be able to stop you. But only thing is, when you sell within 3 years, then when you calculate 80 SCP, because when you sell within 3 years also, you'll have to calculate capital gain. That time, I will reduce your cost. That 52 lakh rupees, which is your cost, I will reduce it by 50 lakh. That is the benefit I gave you because you're breaking your promise. I'll repeat. You have to hold the new asset for 3 years. What if you want to sell it? I cannot hold you guys. I cannot lock you up in a room that don't sell this house. You can sell it. But whenever you sell it, you will calculate 80 SCP. In that, the cost will be 52 lakhs, but I will reduce it by the amount of exemption I gave you earlier. So that is 50 lakhs. All right. So that is a punishment. And I have a lot of time to buy. I have 2 years to buy. So till then, at least I can go and gamble on horses with this money. No, there is an account called capital gain account. You have to deposit the money in this account, not tomorrow, not day after, by the return filing due date. You have to deposit. What if I don't deposit? Then you will not get this exemption. What if I deposit less? Then you will get less exemption. So basically, till you use the money to buy the house, you cannot misuse the money. You have to put them in a return filing due date. You have to put them in a capital gain account by the return filing due date. Guys, this is an exemption for house. Like that, there are other exemptions. Let's quickly discuss other exemptions also. Next, of course, here there's one more. If your long-term capital gain is up to 2 crores, guys, if it's up to 2 crores, then the government says, I understand sometimes you're a big family, 2 brothers, 2 children, 2 sons want to separate. So can you buy 2 houses also here? Yes. So you can buy 2 houses, or you can buy one, construct one, depends. Basically, this benefit will be given even for 2 houses. But of course, all the conditions apply to both the houses. They should be purchased within that time period, constructed within that time period, not sold for 3 years, capital gain account, all of them applies, but you can buy 2 houses. Guys, this is perfect. So, but only if your long-term capital gain is up to 2 crores. Alright, so this was the first one. The second is a section called section 54B, or actually we'll do 54F only. Now 54 was basically a house property. It cannot be a plain piece of land. It has to be a house property. That means a roof and all that. And 54F says that it can be, you are selling here any long-term capital asset other than house property. Basically the shortcut is here family assets. Example, can I sell jewelry? Can I sell gold? Can I sell shares? can I sell a plain piece of land? Yes, you can sell any family asset. And let's say the long-term capital gain, let's say the net sale consideration, that is your sale consideration minus your brokerage, is 1 crore, and your long-term capital gain is, let's say, 45 lakhs. The government says, you have gain, please pay me tax. They said, listen sir, I did not sell this gold, let's assume it is gold, I did not sell this gold to make money. I sold this gold because I want to buy a new house property. So the government says, oh, you've sold this gold to buy a house property, you should have told me before, because I'll give you an exemption under 54F. Let's understand what is 54F. Mostly it's similar to 54, only thing there are some differences. Let's see what is similar. From the date of transfer, you have to buy the house within 2 years or before within 1 year. If you are constructing from the date of transfer within 3 years, before also no problem. You have to hold it for 3 years. If you sell it in between, the cost will be reduced. Till you buy, you have to put money in capital gain account scheme. Yes, till the return filing due date. These things are similar. So what is different? Different is you need to now not invest only 45 lakh. You need to invest a bigger amount, that is net sale consideration. So basically the amount of investment has to be the net sale consideration. So what if you invest 1 crore? Then have you done 100% of your job? Yes. Then we will also do 100% of the exemption. But what if I only invest 80 lakhs? Then because you did only 80% of your job, we will also do only 80% of our job, that is 36 lakhs. We will only exempt 36 lakhs. So very smart guys, here the government says that listen, we will give you this exemption of family assets for house, but you have to invest the net sale consideration. If you invest less, then that proportionately we will also give you an exemption. Alright guys, here let's see if there's anything else in this. 1 second. In 54F, perfect. Here also guys, this benefit you can get when you're buying your first house. Yes, congratulations. Or when you're buying your second house, that means in the exam if they say this is your first house, congratulations, you'll get this benefit. Or if they say you have already one house before this, still you will get this benefit. Yes. But if they say you already have 2 houses, 3 houses, 4 houses, 5 houses, then you will not get this benefit. So this is only for the first and second house. This is 54F. Next, 54B. Guys, here you are selling an agriculture land. The shortcut is barren agriculture land. B is for barren. This can be either short term or long term because the government loves agriculture. So they say whether it's short term, whether it's long term, doesn't matter. Let's say your gain is 40 lakh rupees. Then the government says if you are going to buy another agri land, you have to buy it within 2 years. There is no construction guys, because land you can't construct. Again same, you have to hold it for 3 years, else the cost will get reduced. Capital gain account scheme, everything else is the same. So this is land for land. Yes, let's see some differences. There short term, long term both are allowed. Yes, both are allowed. Next, if you are selling rural agriculture land, then this will not apply only because rural agriculture land is not an asset. So there will be no gain. So what are you trying to save? And when you buy, your buying can be urban also or rural also, doesn't matter. And if you sell rural within 3 years, then cost will not reduce, because what's the point of reducing cost? So guys, for rural, please tell me, things will change. Selling rural will not have any capital gain, so you will not even apply this. Buying rural land, if you sell it within 3 years, you will not do 80 SCP. So how will you reduce cost? You will not reduce cost. Whatever was your exemption, will now tax it simply in that year. Perfect. So this section 54B, 54F and 54 are only applicable to individuals and HUF. 54 shortcut is 54BF, 54, 54B and 54F are only applicable to individuals and HUFs. So for others, is there any benefit? Yes, there is a benefit. Guys, this is your industrial land and building. Example, this is a factory that you have, but the government doesn't like this factory of yours in the middle of the city. So they say, listen, we are going to compulsorily acquire it. We are going to demand it from you. Section is 54D, D for demand. And of course, even compulsory acquisition, they pay you enough money, guys. So you have a capital gain of, let's say, 1 crore rupees. This can be long term as well as short term, because here, guys, the government can demand it anytime. So you need to buy a new industrial land and building. Within how much time you need to buy? You need to buy it within 3 years. Same thing, guys, capital gain account. Hold it for 3 years. If not, cost will get reduced. All of that is the same. So what is the difference? First, this is industrial land and building. Second, it can be long term or short term, and it is compulsorily acquired. That's why the shortcut 54D, and it applies to everyone. Yes, it applies to all. And that brings us to the last but the most important exemption, guys, which is again available to all. They say sometimes when you sell a long-term capital asset, being land and building, or also only land, and let's say you have a long-term capital gain of, let's say, 60 lakh rupees, it is not always possible to buy a house again of the same value. So then what they have suggested is if you bought a house of 40 lakh and you have spare 20 lakhs which you want to invest, or if you want to invest this amount, then we'll give you a section called 54EC, which will ease your capital gain. Basically, you have a long-term capital asset which is land and building, or only a piece of land. You've sold it and you have a gain, but you don't want to pay tax on it. So here is a solution. You can buy bonds. Which bonds? Either REC bonds, Rural Electrification Corporation, or NHAI bonds, or any other specified bonds. So you can buy any of these bonds. Yes. You have to buy the bonds very quickly, guys. Within 6 months you need to buy these bonds. Yes. And that's why we don't have any capital gain account scheme here, because the time is too short. You need to hold these bonds for 5 years, not for 3 years. So exception here. Yes. And guys, the maximum investment you can do is of 50 lakhs worth of long-term capital gain. So what if I have 60 lakhs worth of long-term capital gain? Sorry, you can save only maximum 50 lakhs worth of capital gain of one particular year. So if I make a gain today in August, then within 6 months I can invest. What if I make the gain in March? Then will I get for this year 50 and then next year 50? No. This year's 50 lakh of long-term capital gain you can invest. The amount you can invest whenever within 6 months, whether in this year or the next year also. Next, guys, anything else that is here? Perfect. So this is 54EC. And guys, in any of the sections that we have discussed, whether it's 54 or 54F or 54B or 54D or 54EC, in all these sections, do we have a timer? 2 years from the date of transfer, 3 years from the date of transfer, 6 months from the date of transfer? Yes. So that timer you will start when, in case of compulsory acquisition, if any of these assets are compulsorily acquired, the timer will start from the date of receipt. Because guys, the government is known for delaying the payment. So whenever you receive, the timer will start from then. So till then, will you hold on to the timer? Yes, that is section 54H. H is hold on to the timer. From the date of receipt, your time starts. Wow guys, that was all the exemption. Very good job on the exemptions also. And now to the last bit. But with this exemption, guys, we could do some sums also. So I'm just going to take up another year. I'm going to take up one more question on capital gain. And let's see what happens here in capital gain. Let's take one example. Perfect, guys. Here it's a 6-mark question. Mr. Roy owned a residential house in Noida. It was acquired on 9th September. Very good question, guys. Slightly difficult also. Pay attention. Mr. Roy owned a residential house. I'm going to call this house property 1. It was acquired on 9th September 2009 for 30 lakh. He sold it for 1 crore 57 lakhs on 7th Jan 2016. You need to calculate the capital gain of 16-17 also. Yes. 15-16 also. Yes. So let's do that calculation. I am talking about financial year 15-16, which is the same as assessment year 16-17. Let's calculate ATSCP. Everyone be with me. A, is this a house property? Is this an asset? Yes. Was it sold? Yes. What is the sale price? 1 crore 57 lakhs. Do I need to check it with the stamp duty value? Yes, but they haven't given me the stamp duty value. Is there a cost? Yes. 30 lakh. Period of holding, is it long term? 2009 to 2016? Definitely long term. So can I index the cost? Yes. So let's calculate, guys. Sale consideration 1 crore 57 lakhs. Any brokerage, etc. Doesn't look like they paid any brokerage. So if there was brokerage, I would have written brokerage and then net sale consideration. Now index cost of acquisition. There is no cost of improvement. So this 30 lakhs divide by which year did you buy it? You bought it in the year 9-10. So divide by 148 into you've sold it in the year 15-16. So into 254 is basically 51 lakh 48,649. So just let me check. 30 lakh divided by 148 into 254. Is this right? 51, 48, 648, 649. Perfect. So 1 crore 57 lakhs minus 51, 48, 649 is basically 1 crore 5 lakh 51, 351. Is this my long-term capital gain? Yes. But who wants to pay tax on this? No one. So from the date of transfer, that is 7th Jan 2016, I've got some time to buy a new house property. Let's say if I bought one or not. Mr. Roy utilized the sale proceeds of the above property to acquire a residential house in Panchkula on 20th July 2016. So have I bought it within 2 years? Yes, congratulations. So what about this capital gain? And I have bought it for 2 crore. So this capital gain will be exempt. So 1 crore 5 lakh 51 351 is exempt under which section? 54. So what is my capital gain of this year? 0. So answer is calculate capital gain chargeable to tax for the assessment year 16-17 is 0. But they are not stopping here. They also want in 19-20. So let's go ahead and let's also calculate for 19-20. Guys, this house you bought on 20th July 2016 and your promise is to keep it for 3 years from the date of acquisition. 3 years means at least till 20th July 2019. But this house property also you sold on 31st December 2018. That means have you sold it within 3 years? Yes, you sold it within 3 years. So no problem. Just that the cost will have to reduce whenever you're doing the ATSCP. Let's do ATSCP here also, guys. Is this an asset you're selling? Yes. Is this a sale? Yes. What is the selling price? The property at Panchkula was sold for 3.25 crores. What is the cost? The cost was 2 crore 5 lakh, but you'll reduce the cost with this capital gain exemption. Yes. And is this also long term? You bought it in July 2016, selling it in October 2018. So is this also long term? Yes. So you'll index the cost. Yes. So let's calculate, guys. Sale consideration 3 crore 25 lakhs. First cost of acquisition, I will take my original cost 2 crore 5 lakhs and I will minus it with the capital gain exemption because that's a punishment 105 51 351, which is basically 99 lakh 48 649. But can I index this also? Yes, because this house is held for more than 2 years, so it's a long term asset, so you can index it. So 99 48 649 divided by which year have you bought it? 16 17, so 264 into the year of selling, that is 280. So you get your cost of acquisition as 1 crore 5 lakh 51 597. For people who are finding this confusing, guys, this is just that he sold one, bought another, sold that also. Now what is the long term capital gain here? 325. It is basically 2 crore 19 lakh 48,402 or 403. And has he bought another one, guys? Yes. And he purchased another residential house in Delhi. Has he purchased it within 2 years? Yes. So 2 crore 57. So can I exempt this also under 54? Yes. Section 54 can be used multiple times as long as you are selling a house property which is long term. So finally here also, what is your capital gain? 0. So both the years, guys, the answer is 0. But for that answer, you had to do a lot of calculation. We will do one more sum on house property. If there is, ICI's favorite is actually, alright, so no, there is only these, otherwise our shares. We'll come to the shares part also, but guys, this is what is capital gain chapter. I'm going to go and do the next part of this chapter, which is the tax on capital gain, but we'll take a 3 minute to 3 minute break here. We'll come back, and the last part of capital gain is how is capital gain taxed. Very, very unique. I have some good shortcuts here to help you understand how is capital gain taxed. Guys, we will do this in just about 2-3 minutes. Take a break, come back fresh, and we will start this. Perfect. Guys, so we are at the last part. Of course, there are some miscellaneous parts like slum sale, etc. We will discuss those also, but this is really important, guys. So first up, guys, in capital gain, you have to divide the assets into two parts. One are other assets. Other assets include your land, your gold, and the second category is listed UU. As you know, listed UU means listed equity shares, listed units of equity oriented mutual fund, and listed units of business trust, which you will see at CA final. Guys, this is listed UU. To give you a simple example, listed UU as when you go to the stock market and you buy shares, or when you go to the stock market and you buy equity oriented mutual fund, they are listed UU. So first let me talk about other assets. Example, let's say a piece of land, or example gold, or example diamonds. So if you buy and sell those, and unfortunately you did not hold them really long, so they are short-term capital gain, the government says we will not offer any special rate on this. These are subject to normal rates of tax. Depends on who you are. If you're a company, then 30%, 25%. If you're a partnership firm, 30%. If you're an individual, slab rates. But if you hold them long term, not only will we give you indexation, of course, you know, guys, we'll get indexation. Not only that, you will be taxed only at a flat rate of 20%. So even if you're a company, you'll be paying only 20%. Yes, even if you're a partnership firm, you'll be paying only 20%. And even if you're individual and you're in the 30% tax bracket, still you'll be paying only 20%. Yes, and that too after indexation. So which is a great benefit. Yes. So that is the benefit of long term, guys. Indexation also and only 20%. And that too you can use your basic exemption limit also here. That means, what if my long term capital gain is 6,50,000 and I have no other income? So can I use my basic exemption limit of 2,50,000? Yes. And on the remaining 4 lakh I will pay at the rate of 20%. Yes. So these are some benefits, but mainly the rate I wanted to talk about is 20%. But guys, listed UU, I always buy my shares at 10:15 a.m. in the morning. I always buy my shares at that time. Why? Because the rate of tax is that. If you're listed UU, the short-term capital gain you make, that means you sell it within 1 year, then you will be taxed at 15%. Flat, yes, flat 15%. And if you hold it for more than 1 year and you sell, then you will pay flat 10% only above 1 lakh. What is this above 1 lakh? Let me explain. If you buy Reliance shares, you really love Mukesh Ambani, you buy Reliance shares and you hold them for more than 1 year and you sell and you're making 1,60,000 rupees profit, long-term capital gain, then although your capital gain is 1,60,000, so what will come out of the capital gain room is 1,60,000. What will go to your GTI total income is 1,60,000, but you will be taxed only above 1 lakh, that is on 60,000 at 10%. That is what I mean by 10% above 1 lakh, only that much will be taxable. So are these benefits, guys? Yes, in India, if someone told you you can only pay 10% and 15% and get away, you're a lucky person. People, companies, individuals like me also, we pay 30% tax, and hence if anyone tells us that listen, pay 10%, pay 15% and get away with it, you're really lucky. So these are very good rates. Why the government giving such good rates? First, you've already paid STT, so that is one thing. And second, they want to encourage people to buy listed UU. So how will you remember this, guys? Let me tell you. There are 4 rates. One is normal rate. Normal rate basically is for short-term capital gain. Then there is 20% rate. Then there is 15% rate, and then there is 10% rate. So there are 4 rates in capital gain. Yes. But normal rate is not just for capital gain. Even your salaries income is normal rate. Even your house property is normal rate. Even your PGBP is normal rate. Even your IFOS is normal rate. So generally all are normal rates only. Normal means nothing special, guys. This 20, 15 and 10 is only in case of capital gain. So let's, guys, now deal with one question which has all these 4 incomes. Let's say from your short-term capital gain, let's say you have 25,000 short-term capital gain, and let's say your income from house property is 1 lakh. Are these both subject to normal rates? Yes. So 1,25,000 will be taxed at normal rates. Let's say at 20%, that is long-term capital gain 20%. This is again 1 lakh. 15%, which is listed UU, let's say is 50,000, and this 10% is basically 1,40,000, on which only on 40,000 there will be tax. Now let's say this is you and your basic exemption limit is 2,50,000. Let's see how you'll end up paying tax. Everyone watch out, guys. First, I am not supposed to pay tax on 2,50,000, but how will I adjust 2,50,000? Will I adjust this first, or this first, or this first, or this first? You will go in the same order, guys. First, the normal incomes will be adjusted against 2,50,000. So from 2,50,000, can I minus 1,25,000? Yes. So I'll do the calculation here, guys. From 2,50,000, I first minus the normal rates. So that is 1,25,000 I will minus. So that will give me 1,25,000 of basic exemption limit, which is unabsorbed or still remaining. From that, which one? So this one first. Next is this 20% will I minus? Yes. So 1 lakh I will minus. So how much remains? 25,000 unabsorbed. Now can I minus this 50? Instead of 50, let's make it 40. Can I minus this 40? You can minus 25 of this 40. So is the basic exemption limit over? Yes, over. And out of 45, you minus 25. So 15,000 remaining here. At what rate you will pay the tax? 15%. And on this 40,000, you will pay tax of 10%. So this 4,000 and this 2250, these are basically your tax liability. Guys, this is one of the most difficult things in the chapter of capital gain. Lots of people don't understand this. So I'm going to repeat one last time. Guys, in salary, there is no special tax. In house property, there is no special tax. In PGBP, there is no special tax. In IFOS, there is no special tax. So special tax is only for a special chapter like capital gain. In this also, guys, for short term, there is no special, it's normal only. But for long term, it is 20%. And for listed UU, you buy it at 10-15. So here is 15 and here is 10. Against both, can we use the basic exemption limit? Yes, whichever is unabsorbed. Whichever is unabsorbed. You can keep using the basic exemption limit, whichever is unabsorbed. But this basic exemption limit can be used only for case of residents. If you're a non-resident, then you cannot use this basic exemption limit for these three incomes. Remember guys, non-residents don't get higher basic exemption limit. Non-residents don't get rebate. Non-residents also don't get this benefit of adjusting basic exemption limit against these three incomes. All right. So this is your adjustment of basic exemption limit. First, the normal rates, which is short-term capital gain and other incomes, then 20%, then 15%, and then 10%. This is how you'll adjust it. Let me check if there's anything else. Tax on capital gains we've understood. Arun Jaitley's cost we understood. Guys, in capital gains, there was a concept called ULIP. That ULIP concept, ICI has come up with a statutory update which they've said that this ULIP concept, anything to do with ULIP is not there at CA Inter. So if you're ever confused that, oh my god, I had heard of ULIP, I just removed from your mind, ULIP is not there in your exam. Sir, is there any income against which basic exemption limit cannot be used? Yes, basic exemption limit cannot be used against casual income. That 3 lakh rupees casual income. And for non-residents, it cannot be used against this 20, 15 and 10. Akshat, good question there. Alright, so I'm just checking if there's anything else in capital gain that we need to know right now. So ULIP, you don't have to remember. We've done exemption, we've done tax. Alright. Guys, there are some 1-2 small things that you should remember. Let me explain to you those miscellaneous things before we start doing sums. Guys, I told you, if someone gave you an advance money, what is ULIP? Doesn't matter. It's a unit linked insurance scheme whereby you're basically paying one amount to get insurance also and to invest in the stock markets also. It's like a 2-in-1 scheme, but all that you around ULIP, taxability of ULIP, etc. will be at CA final. All right. Guys, just doing some miscellaneous sections now of capital gain chapter. First, there's a section called section 51. Guys, whenever you get an advance on or after 1/4/2014, if you get an advance, example, you want to sell your house, you get an advance. In a business, you get an advance. If you get an advance after 1/4 on or after 1/4/2014, that let's say you get 10 lakhs advance, which is forfeited, it goes and is taxed under IFOS. But before that, guys, if you had got any advance before that, let's say you had got 3 lakh rupees advance before that, before 1/4/2014 for the same house, then the government says we will not tax it right now. Then how is the government giving up the taxation? They're not taxing it. They're not taxing it right now. So whenever you sell this house, you got an advance of 3 lakh. This got forfeited. You can keep the 3 lakh, no problem. The government doesn't want to tax you right now. But whenever you sell the house, that time you will do 80 SCP. And that time the cost will be reduced by 3 lakhs. So if your cost of the house is, let's say, 53 lakhs, then you will reduce the cost by 3 lakhs. So lower the cost, higher the gain and higher the tax. So they indirectly tax this 3 lakh when you sell the house. This was the situation before 1/4/2014. Now it has changed. Now they don't basically want to wait for you to sell the house. Whenever it is forfeited, it is taxable under IFOS. So earlier it was a section called section 51. Not so important, guys. Next. There are some times you don't want to sell individual assets. You want to sell the whole undertaking or a whole business unit. That is called slum sale. Example, Britannia company has 2 units, biscuit unit and transport unit. And let's say the transport unit is loss making, so they want to sell it. The transport unit has some trucks which are depreciable assets. It has some land which is non-depreciable. It has some loans and creditors, etc. So sir, even now when we sell, we still deduct the cost for acquisition for forfeiture before 2014. Yes, whenever you sell, if the forfeiture happened before 1/4/2014, whenever you sell, you reduce the cost. All right. So trucks, land, loan, creditors, this is what the transport division had, and they decided to sell this to Baba Ramdev company for 50 crore rupees. The government says in this case also there will be ATSCP. How we will calculate? Let's see. A, is this undertaking an asset? Yes. T, are you selling it? Yes. S, what is the sale price? 50 crores. We will come and check it. There's an amendment here, guys. What is the period of holding? If you hold it for more than 3 years, long term. If you hold it for less than 3 years, short term. And what is the cost? The cost is the net worth of the undertaking. Net worth means assets less liabilities. How will you value the assets? Anything which is depreciable, you will take the depreciated value. Anything which is non-depreciable, you'll take the book value and you'll minus the liabilities, and let's say the net worth works out to be 40 crores. So sale consideration 50 crores. Let's say brokerage, etc. you will minus, but if there's nothing, you will not minus anything. This is net sale consideration, and from that you will minus cost of acquisition of 40 crores. So your long-term capital gain is 10 crores. Yes, but if it's long-term, why didn't we index it? Because in case of slum sale, you do not get any indexation. There's a reason, I'll tell you. Why you don't get indexation is because most of the values are basically depreciable values. So you've taken current values only, so why indexation? Second, 3 years is what will define long term and short term. So on this 10 crores, you will have to pay, this is long term capital gain, so 20%. Guys, on all long term capital gain, 20% unless they are listed UU. Guys, a recent change happened here. This sale consideration can be manipulated. Baba Ramdev can say, I'll not pay you 50 crores, I'll pay you just 40 crores in bank, and 10 crores I'll give you cash. No, we'll avoid tax. So if they try to do that, the government says, listen, this sale consideration will either be the sale consideration that you are saying, or the fair market value of the assets, whichever is higher. I repeat, guys, this sale consideration can be manipulated like any sale consideration. So now they will take the sale consideration which you are quoting, or the fair market value of the assets, whichever is higher. Quickly recapping, this slum sale section 50B, B for Britannia. You're selling one entire undertaking without assigning values to individual assets. That sale is called slum sale. ATSCP will apply. Cost is the net worth. Sale price is what? The higher of the two. No indexation, more than 3 years, then long term, and whatever the gain is, you will pay tax at the rate of 20%, because any long term capital gain you will pay 20% unless it's 10-15 listed UU. All right, anything else? Let me check. 51 done, 50B done. Cost we've already done. Yes, there are some special circumstances. Let's do those. Guys, sometimes you meet, your asset meets with an accident. Example, a fire happened and your house got destroyed and you got insurance compensation. So the government says this is extinguishment of asset. Here also we'll do AT SCP. Yes. Is there an asset? House. Is there a transfer? Yes. Fire, it got destroyed. What is the sale price? How much ever you get from insurance company. Let's say you get 1 crore from the insurance company, or if you get another house, in the fair market value of that house. What is the cost of this house? Let's say the cost of this house was 10 lakh. And if it is long term, then will you index that? Yes. So let's say this is the sell price, this is the cost, let's say 60 lakhs. So your 40 lakh is a long term capital gain. Will you have to pay tax on this? Yes. So what is different? Why are we discussing this? Because here, in case of insurance compensation, you can get the money late also. So hence this calculation will be done in the year of receipt. This is a section called 45(1)(a). A is for accident. These are special circumstances. Guys, before this, I just want to explain one thing. If I am selling my house today for 1 crore rupees, and what if this guy pays me in 3 years, first year, second year, third year, 20 lakh, 20 lakh and 60 lakh. Will my capital gain also be spread over 3 years? No guys, the government doesn't care how you're getting the money. The government says, did you sell it on 16th August 2022? Is this a year of transfer? We'll tax you in this year only. Oh, but I got my money in 3 parts. That is between you and the buyer. We don't care. You will have to pay capital gain tax in this year only. The government is very strict, except in case of destruction, accident, insurance, 45(1)(a) in the year of receipt. When you convert your capital asset into stock, on this also there is capital gain, but this will be calculated only when you sell the stock based on the FMV on the date of conversion. So let's say you bought a capital asset in the year 2016, you've converted it into 2020, and today you're selling it in 2022. So today you will calculate capital gain and pay to tax. Not in the year of transfer, but in the year of sale, you will pay the capital gain. How will you calculate capital gain? What is the sale consideration on the date? We don't have any sale consideration, so you'll take FMV. Cost is your cost, and that's how you'll calculate. So basically, if you don't have a sale price, you can take the FMV. Yes. Guys, this was your house and you were selling it, but not to anyone else, to the government under compulsory acquisition. You wanted 5 crores, they first paid you 4 crores, then you fought in the court, they paid you 1 crore extra, plus they paid you interest of 10 lakhs. This interest is taxed under IFOS. We saw day before yesterday. This interest is taxable under IFOS. We get 50% discount on this. But I'm talking about this 4 crore and 1 crore. Guys, when you get this 4 crore, will you do AT-SCP? Yes. Is this an asset? Is it compulsory acquired? Selling price is 4 crore. Cost is whatever your cost, period of holding, indexation, everything. But this will happen in the year of receipt because the government can pay you late also. And when you get this 1 crore, again will you do AT-SCP? Yes. But the cost you cannot take again because you've already minus the cost here. And again, this will also in the year of receipt only. So whenever you receive that year, will you calculate capital gain? Yes. This is a section called section 45(5). Here in the second one, will you have litigation expenses? Yes. Can I minus litigation expenses at least in the cost? Yes, you can. I'm going a little fast, but I hope you understand these, guys. If any doubt on any of them, let me know and we can go into more detail on any of them. Alright, and the last one, guys, is very important. It's called a joint development agreement. Let's see what is this joint development agreement. I have a land or I have a house which is really big. This is me, and I have a land which is really big, but I don't know how to develop it. So this is a builder. He says, listen, I'll build it for you. So we enter into joint development agreement. I give him my land and he promises to give me 5 additional floors in the building plus 1 crore rupees. He promises to give it to me. So guys, is this ATSCP? Is there an asset? Yes, my land. Am I transferring it? Yes, exchange. What is the sale price? 45 1B ULIP thing that we must be ignored. Yes, absolutely. 45 1B you will ignore right now. Guys, S, what is the sale price? The stamp duty value of those 5 additional floors plus 1 crore. That is your sale price. What is the cost? Whatever price you bought the land for. And what is the period of holding? Long term, short term. Can I take indexation? Why not if it's long term? Now guys, all this is great, but please tell me, I have entered into the joint development agreement in 2022, but I will get this 5 additional floors maybe 5 years later in the year 26, 27. So why should I pay the tax today only? Because I'm going to get these 5 additional floors later on. So the government says, I understand, thumbs up. So they say, you pay this tax in that year, no problem. But you have to wait till that year. You don't have to sell these additional floors. If you sell it, then whichever year you sell it, we'll calculate capital gain. So this entire calculation has to be done only in the year you obtain the CC, yes, completion certificate or occupation certificate. And the stamp duty value will be as on the date of obtaining the CC or OC. That is a concept called section 45(5)(a), 5 additional floors. There's also a section called 45(1)(b), which is basically on ULIP, which now has to be ignored. Perfect. And guys, the main calculation section of capital gain is section 48, which you already know in a way. Section 48 says always start with the sale consideration. Let's say you're selling a house for 1 crore minus expenses on transfer, example brokerage, etc., which should be connected to the transfer. Let's say 5 lakhs. So this is 95 lakhs. Yes. Less cost of acquisition, less cost of improvement. So are there only 3 deductions? Yes. 1 deduction, 2 deduction, 3 deduction. Just like house property, guys, here also 3 deduction. And if the asset is long term, index. So can I minus, let's say 75 lakhs here and 5 lakhs here? Yes. This is how you will calculate, and you will get 15 lakhs. If it's a long term, then long term capital gain. It can also be a loss. You know what to do with loss. Loss is unique. Or it can be short term also. Short term capital gain, short term capital loss. This calculation is given in a section called section 48. It also has 4 provisos, guys. This section has 4 provisos. Inflation 3%, bonds stable. What does this mean? This means that for indexation will be given to all long-term capital assets. That's the first point. So if the asset is long-term, will you get indexation? Yes, indexation basically means adjusting for inflation. Yes, all long-term assets will get indexation. Short-term, sorry, no indexation. But guys, these 3 people will not get indexation. Who are these 3 people? You know them as listed UU. They will not get indexation. No. Why? Because guys, you know now 10 and 15%. We've already given them some other benefit. So hence no indexation for them. And guys, bonds, debentures, etc. also don't get any indexation. Except sovereign gold bonds and inflation index bonds. What are sovereign gold bonds? Bonds issued by the government which are linked to the gold price. If you hold them for 8 years, the government buys them back and they rise in price, and the government buys them back after 8 years and no capital gain on them. But if you sell them within 8 years, then capital gain, but you will get indexation, yes. Otherwise on bonds, you don't get any indexation. Inflation index bonds are basically linked to inflation, so they also increase in price, yes. So only 2 bonds, sovereign gold bonds and inflation index bonds, only these 2 get indexation, otherwise bonds don't get indexation. And guys, STT, CTT, In PGBP you would get a deduction, but in capital gains you don't get a deduction of STT and CTE that you pay. Repeating guys, inflation 3%, bond stable, indexation given to all long-term assets except these, and you also know that slum sale you don't get any indexation, so accept that also. Perfect guys, that is the end. Yes guys, that is mostly. There are some smaller points like transactions which look like transfers, sections of transfers, etc., but honestly those are not important guys. This is what you should know, and if you know this well, I think you will be able to score really well in the exam. I am opening up to the module, but before the module I am tempted to do some questions from the question bank, so let's do those first. This is capital gain. We've already done the first question. Now let's look at the second question guys. Mr. Rajan provides you the following details with respect to sale of certain securities by him during the year 1819. What do we need to calculate? They will tell you calculate the amount chargeable to tax under the head capital gain, and also calculate the tax on such capital gains for the year, assuming that the other incomes of Mr. Rajan exceed the maximum amount not chargeable to tax. That means guys, his basic exemption limit is already being used, so calculate his tax also. Let's do this guys. Very interesting question. First, sold 10,000 shares of A Limited on 5th April 2018 for 650 per share. Guys, this might sound complicated till you write ATSCP. Is there an asset? Yes. What kind of asset guys? They are listed shares, so asset is listed UU. Yes, remember listed UU 1015. Is there a transfer? Yes, they are sold, so transfer. What is the sale price? 650 is the sale price. What is the cost? We'll come to that. What is the period of holding? You sold them in 2018. When did you buy them? You bought them in 2016, and they are listed shares, so is it long term? Yes, it is long term. Will you get indexation? Ideally you should get indexation because they're long term, but this is listed UU, so you will not get indexation. So now your only thing is to find out the cost. But guys, I see a date which is Arun Jaitley's date, so I know that these are listed UUs. Were they bought before Arun Jaitley's speech date? Yes. Sold after Arun Jaitley's speech date? Yes. And were they listed UU? Yes. So let's find out new cost guys. Arun Jaitley cost. Higher, lower. Higher of original cost, which is 100, or new cost. What is the new cost? Selling price. How much did you sell it for? 650. Or the fair market value as on Arun Jaitley's speech date. Fair market value is the highest price. Average price or lowest price is the highest price, so 300. So 650 or 300, which is lower guys? 300. And 100 and 300, which is higher? 300. So we've got a cost 300. Have we got all 5? Yes. Now it's time to solve. What is the sale consideration? 10,000 shares into 650, that is 65 lakhs. Is there any brokerage, etc.? STT is there, but sorry, STT you can't minus. So this is the net sale consideration. What is your cost of acquisition? 30 lakhs. So guys, this is 35 lakhs of long-term capital gain. Any idea guys on listed UU, what is the rate of tax? At the rate of 10% above 1 lakh. So keeping this parked, because we've already got one answer, there are two more answers. Guys, I want you all to try this, the first one and the second one, and then we'll discuss. Take 3 minutes. Per these you should take 2 minutes guys. Take 3-4 minutes and try and solve and get one answer. Please follow ATSCP. This is listed UU. This is unlisted share. Over to you all please. All right, so looking at this, guys, no problem, take your time, guys. All right, let's try this, guys. So just seeing what this is. B mutual fund sold 1000 units of B mutual fund. Let's try this. ATSCP. Is this an asset? Yes. Is it listed? Yes, guys, this is listed. How do I know? Because STT was paid. So this is listed UU. Yes. Is it sold? Yes. What is the sale price? 50 rupees. What is the cost? The cost was 10 per unit. Period of holding, is this long term? From 15th April 2017 to 20th April 2018. Is it long term? Yes, it is long term. But guys, will Arun Jaitley's speech apply here? Yes, Arun Jaitley's speech will also apply here. So what will be the cost? Higher, lower. So higher of original cost 10 or new cost. New cost is what is the sale price? 50. And what is the FMV? In case of mutual funds, the FMV is net asset value, which is 55, which is lower 50 and which is higher 50. So this becomes 50. So in this case, sale price is 50, cost price is 50. Do you get any indexation? No, this is listed UU, so no indexation. So answer here is 0. No capital gain in this one. Excellent, Akshat, good answer there. No capital gain in this one. Guys, looking at the last one again, guys, ATSCP. Is there an asset? Yes, these are unlisted shares, so indexation will apply. Is there a transfer? Yes, it is sold. What is the selling price? 200 per share. Do I need to check the FMV? Yes, the fair market value of the shares, but they have not given the FMV, so no problem, we'll take 200, we'll believe them. What is the cost? The shares were issued by the company as bonus. So bonus shares, guys, cost is usually 0, but because they were issued in 1997, can I take the fair market value? Yes. So I can take 50 as the cost. Period of holding is long term. So will I get indexation? Yes. So 50 rupees I will divide by 100. Into which year am I selling them? I'm selling them in the year 1819, that is 280. So that's it. The sale consideration is 200. How many shares? 100 shares. So 200 into 100 is 20,000. No expenses on transfer, and index cost of acquisition is 50 divided by 100 into 280 is 140 into 100, that is 14,000. So this is 6,000. Now guys, excellent. This is also long term. Even on the earlier page, this was also long term. Let's try and find out his tax liability. Everyone watch out. Long-term capital gain was 35 lakhs in the first case. Second case was 0, and third case is 6,000. Is this also long term only? Third one also? Yes. So it's 35 lakh 6,000. Now guys, are all this listed? Sorry, my bad guys, my bad. I cannot mix all these. 35 is at the rate of 10%, but only 34 lakh. And this is unlisted share. So this will 6,000 will be at the rate of 20%. 10% only on 34 lakhs. Guys, please don't get too bothered about that 1 lakh. Don't worry. Guys, please tell me, what will be my capital gain? My capital gain is 35 lakhs. What will come out of the capital gain room? 35 lakhs. What will go in my GTI, TI? 35 lakh. But what will be taxed is only 34 lakh. So don't worry about it. So right now it's 35 lakh long-term capital gain. But I also have another long-term capital gain of 6,000 which will be taxed at 20%. Why 20%? By this is not listed UU, this is unlisted share. So 20%. And this 34 lakh at 10%. Can I use my basic exemption limit? No, because it has already been used. They've said that Mr. Rajan exceeds the basic exemption limit already. So here, let's calculate the tax liability. Tax liability on 34 lakh at 10% is 3 lakh 40, and on 6,000 at 20% is 1,200. So this is your tax liability. Perfect, perfect, perfect. Yes. Guys, I'm looking this one cell study. I'm looking at July 21 for 6 marks. This one, guys, it has one part, it has two parts. Yes, it has two parts. So let's do this very, very carefully, guys. We will do this. This is July 21. Again, I want you all to do it wholeheartedly, but first we'll discuss it. Discuss the capital gain in the following scenarios. Determine the taxable amount and the rate of tax applicable. So you have to do the taxable amount and also the rate of tax. All right, guys. First is shares of XY Limited. STT was paid. Please tell me, guys, ATSCP. Will we able to find it out? Yes. And is it a listed UU? Yes. And this is a residential house. So again, will we do ATSCP? Yes, but this is not a listed UU. This is a normal asset. Guys, honestly, I can do all of these in no time and move ahead, but I want you all to try. So please take this 2-3 minutes time and please try finding out ATSCP. Even if you go wrong, it's perfectly okay, but try, because that's what you'll have to do in the exam also, you with your pen, your calculator and your mind. Over to you. 3 to 4 minutes you'll get for this. Here we are, guys. On 20th February 2021, 10,000 shares of XY Limited, a listed company, are sold. That's what I need. Is there an asset? Yes, listed UU. Is there a transfer? Yes, sale. How much is it sold for? 550. And STT was paid at the time of sale of shares. These shares were acquired by him on 5th April 2017 for 395. Is there a cost given? Yes, 395. And what is the period of holding? 2017 2021. It is long term, but unfortunately because they are listed UU, I will not get indexation, but I will remember Arun Jaitley here. I'm remembering Arun Jaitley here because 31st Jan 2018. So higher and lower. So what is the higher cost? What is the original cost? 395. Or the new cost? What is the new cost? What is my selling price? The selling price is 550, and on that day what is the fair market value? 390, which is lower. So 390 I will take. 390 or 395, which is higher? 395. So my cost remains the same as 395. So perfect, I've got the first answer already. Guys, it is 10,000 shares at 55, so 55 lakhs, and 10,000 shares on 39 lakh 50 is my cost. So 55 minus 39.5 is 15 lakh 50,000 is the first answer. This is my long-term capital gain. Any idea at what rate it will be taxed? At the rate of 10% on only 14 lakh 50,000. I hope that is clear. Now going to the second question. Mr. A is the owner of a residential house which was purchased in 2016 for 9 lakh. He sold the house. ATSCP. Is there an asset? Yes. Has he sold it? Yes. What is the selling price? The selling price we will see is 19 lakhs. But will we check it? Maybe. What is the cost of this house? The cost of this house is 9 lakh. And is the period of holding long? Yes, 2016 to 2020. It is long term. So will I index my cost? Yes. Everything looks okay. Now let's check. The stamp valuation was 45 lakh. Guys, if the stamp duty value is 45 lakh, I will take my sale consideration of 19 lakh and multiply by 110% into 110%. It is only around 20 lakh 90,000. It is not 45 lakh. So I will take 45 lakh as my sale consideration. So you go away, you are lying. We'll take 45 lakh. So I have got my sale consideration finally. Yes. My cost, I have to index it. So 9 lakh divided by 264 into 301 is 10 lakh 26 136. So this also goes 10 lakh 26 136. Let's do the calculation. Sale consideration 45 lakhs. Is there any brokerage? No brokerage mentioned here. So cost of acquisition, index cost of acquisition is 10 lakh 26 136, which is 34 lakhs 73,863. Now guys, this is my long-term capital gain. I would ideally have to pay 20% tax on it, but who wants to pay tax? So can I sell this house? Is this a long-term house? Yes. And can I buy a new house, or can I invest in bonds? Yes. I can invest in bonds within 6 months. I sold the house on 4th September, invested on 21st March. Is that okay? Yes. So 19 lakhs under 54 EC. So how much remains, guys? 15 lakh 73 863. Perfect, Akshat. I think answer is coming perfectly right. You said I'm confused. So your confusion is removed and you got the right answer. Congratulations, Narsimhan. Good answer for that one as well. So these are two incomes, guys. This will be taxed at 20% and this will be taxed at 10%. Can you minus basic exemption limit against both? Yes. Sir, isn't 21st March 6 months after? How can it be 6 months after? Let me check. So this is September, October, November, December, Jan, Feb, March. Yes, my bad. You cannot minus this. Sorry guys, my bad. You cannot minus this. So your taxability is 34,73,863. Perfect. All right, so that's the answer for this one. Guys, this is slum sale. This is the last question that we'll do in capital gain from this question bank. All right, have a look at this, guys. This is slum sale. Please remember, for slum sale also you need to find out AT SCP only. Let me give you an idea. This is a section called section 50B. B is for Britannia. Asset is the undertaking, transfer is the sale, no indexation, absolutely right. Sale price is whatever they are saying, but you have to also see FMV. Of course, this was not the amendment that time, but now it's the amendment. And cost is the net worth. Net worth means depreciable assets. Yes, if you have not depreciated, you have to depreciate. And period of holding, if it's more than 3 years long term, if it's less than 3 years short term. Over to you all. Please calculate this. Remember guys, that they have forgotten depreciation on some of the assets, so you will have to provide depreciation from that particular date. Over to you all. Please, very good question for 4 marks can be repeated now that we have an amendment as well. Over to you all, 2-3 minutes and then we will discuss. Guys, looking to try this together. Honestly, this sum right now will be with a twist. They will give you the FMV of the assets also. Let's say they will say FMV of the assets is 38 lakhs. So I'm just twisting the sum a little bit. Guys, is it an asset? Yes, this entire undertaking is an asset. Is there a transfer? Yes. What is the sale price? They have said sale price is 40 lakh, but we will compare it with FMV and we will take it whichever is higher. So of course 40 lakh is higher. Period of holding, guys, you started this in 2018. You're selling this in 2021, 19, 20, 21, but 31st March, and hence this is short-term capital gain. What is the cost price? Is the net worth. Let's calculate the net worth. You will take building furniture, debtors, assets. You will minus unsecured loan, you will minus trade creditors, you will minus bank loan. Yes, own capital is not liability. But guys, first let's do the adjustments. No individual value of any asset is considered in the transfer deed. Okay. Other assets which is of 8 lakh include trademarks of 2 lakhs. So I'm changing the 8 lakh and I'm making it 6 lakhs. And trademark, I'm keeping it separate of 2 lakh, which is bought on 1st April 2020. Right now we are in 2021 and 2021 end. So basically you bought it at the start of the year and which you have not provided any depreciation. Why 6 lakh? Because they have said 8 lakh includes this 2 lakhs of trademark, which is involved some change. So I'm keeping 6 lakh, which does not have any change, separate. On this 2 lakh, we have to do some calculations. I'm keeping it separate, 6 lakh separate, 2 lakh separate. On 2 lakh, from 1st April 2020, this is the year 2020-21. So 1 year's depreciation on trademarks, 25% depreciation, guys. So 2 lakh into 25% is 1 lakh 50. So I'm keeping 6 lakh separate and 1 lakh 50 separate because trademark is now worth only 1 lakh 50 depreciable value. This done, this done. Furniture. Furniture is 5 lakh, but furniture of 1 lakh 50. So I'm going to make 5 lakh separate it, make it 3 lakh 50. On 3 lakh 50, there is no confusion. But on 1 lakh 50, which was purchased on 5th November 2020, no depreciation has been provided. Should you have to provide depreciation? Yes. How much depreciation? Only half a year. So 5%. So 1 lakh 50 into 5%, that is 7,500. So 3 lakh 50 and I'll keep 142,500 separate. Guys, what have I done? First, whichever is the tainted part, wrong part, I've removed it and I've calculated the depreciable value. Like from this 5 lakh, I've removed 1 lakh 50. And from this 8 lakh, I've removed 2 lakh and I've done this depreciable value calculation. Now, are we ready? Let's see. Unsecured loan includes 50,000. So out of this unsecured loan of 2 lakh, 1 lakh 50 is not a problem. But on the 50,000 from his wife, she has agreed to waive it off. So there is no loan only of 50. So 50 you have to ignore. Now guys, let's calculate the net worth. You will take 5 lakhs. Yes. 3 lakh 50. Yes. 2 lakh. Yes. 6 lakh. Yes. 1 lakh 50. Yes. 1 lakh 42,500. Yes. You will add up all these numbers. Let's do it. 5 lakh plus 3 lakh 50 plus 6 lakh plus 2 lakh plus 1 lakh 50 plus 1 lakh 42,500, which is 19 lakh 42,500. Is this the assets? Yes. Now let's see the liabilities. 5 lakh plus 2 lakh 50 plus 1 lakh 50 is 9 lakhs is the liability. And if you minus, so 10 lakh 42,500 is the net worth, which is basically nothing but my cost. So can I minus the cost from the sale consideration? Yes. So 40 lakhs is my sale consideration. There are some expenses on transfer, 80,000, which I can minus. So that gives me 39 lakh 20,000 minus 10 lakh 42,500, which is the cost. So 39 lakh 20,000 minus 10 lakh 42,500, which is gives you 28 lakh 77,500. This is my short-term capital gain. And as you know guys, because it is not long-term, it will be taxed at normal rates. Can I minus the basic exemption limit? Yes, why not? So guys, these are the questions on capital gain. Honestly, capital gain again is a very humongous chapter. There are small, so many concepts, so many things. But guys, instead of getting puzzled on a chapter like this, do it the way we've done it. Do calculation of capital gain, do the exemptions and do taxability and do miscellaneous things like section 51, slum sale, some special circumstances like accident, etc. and do the computation under 48, and that's all guys. Reserve Don't get into section 47 and all that. That's very confusing. And I promise you, exam at CA Interlevel tests you on these knowledges only and these questions only. Yes. We've almost there on the end of capital gain. We've not done the module or material questions on capital gain because I don't want you to unnecessarily stress over it, guys. Rather, what I will do now is we could take up a question on capital gain and try and do that from the latest paper. Let's see if there's any other question. From this paper, we did one question on that gold ring and diamond. Let's see if there's any other question on capital gain. This was on capital gain, which we did. This is set off chapter, which we did. Yes, this is some on capital gain. Let's do that, guys. Compute the income of Mr. Lalit chargeable under IFOS and capital gain. Guys, this is something that we could do. So Akshat, the deal is that this paper was not difficult, but there were a lot of small tricks. And people thought that, oh no, I know this, but no, a lot of people got small mistakes here. This was actually a slightly tricky question. Like this residential status question is actually difficult because the new amendment kicks in and her dear plus one income is actually more than 15 lakhs. So a lot of people did this question thinking that they were right, but there were a lot of small minor things which were tricky. I'll show you what, and also the correction I feel was difficult this time, because the paper was slightly easier, I feel. But of course GST was a cakewalk. GST was very simple as compared to DT. Alright, let's try and see, guys, what is in this question, and then let's end this day on this question. Mr. Lalit is a dealer in shares and securities, has entered the following transaction during the previous year 21-22. Guys, we have to calculate his IFOS income and his capital gain. Let's see what all we can figure out from discussions. He received a motor car of 5 lakh as a gift from a friend Sunil on the occasion of his marriage anniversary. Guys, this one will not be taxed under section 56 to 10 because it is not in the definition of property. So no implication of this one, no. Cash gift of 24,000 each from 4 of his friends. Guys, this one is property MISB Satjaw. It's received from his friends and it is more than 4 friends. So 84,000 and it is more than 50,000 aggregate. So hence it is taxable. Yes, 84,000 is taxable. Land at Jaipur on 1st July 2021 as a gift from his friend Kabra. The stamp duty value of this land is 6 lakh on that day. The land was acquired by Mr. Kabra. How much he acquired for it doesn't matter. You got it as free gift. Now, is it MISB Satjaw? Yes. Is it on occasion of marriage from relative? No. And is it more than 50,000? Yes. So will it be taxable? Yes. So 6 lakh is also taxed under IFOS. So please remember, guys, this land is already taxed on 6 lakhs. If you sell this land, the cost will be 6 lakh because it is already taxed up to 6 lakhs. Moving ahead. Mr. Lalit purchased from his friend Mr. Abhishek, who is also a dealer in shares, 1000 shares of ABC Limited at 400 when the fair market value was 600. This is same like a module question, guys. But because this is not MISB Satjaw, but shares are MISB Satjaw. No, he's a dealer in shares, and hence this one will not be taxed in IFOS, gift taxation or benefit taxation. This will be taxed in PGBP, which they have not asked us to calculate. 43 CA will not apply. 43 CA is only for land and building. Nothing will apply here, guys. Nothing. They've only tried to confuse you. They've said that you are getting a benefit 600 shares for 400, but remember, guys, just remember the rule that there are 5 rooms. This one is not an IFOS room. He's a dealer in shares. So is he making some extra profits? Yes, but that will be taxed in PGBP. Mr. Lalit sold these shares. Congratulations, Mr. Lalit. You will make money, but we are not bothered because that is PGBP. Guys, small things like these were tricky in the exam. So a lot of people felt their paper was really nice, but these were some tricky things in the exam. On 1st November 2021, Mr. Lalit took possession of his residential house booked by him 2 years back at 20 lakhs. So guys, this is a house and maybe is getting a benefit. Let's see. What is the sale consideration? 20 lakhs. The stamp duty value of the property when the day he took the possession was 32 lakhs. So there are 2 stamp duty values maybe. Stamp duty value is 32 lakh on the day he took the possession, and the date of booking it was 24 lakh. So which one ideally would he want to take? He would want to take 24 lakh, but let's see. He had paid 1 lakh by account pay check. So can he take 24 lakh? Yes, he can. Now let's check, guys. There is a section in which this is checked. This is a benefit. Let's check this benefit he is getting, guys. He has paid 20 lakh for stamp duty of 24 lakh. So what is the benefit? Benefit is 4 lakh. Step 1, is it MISB SATJO? Yes. Step 2, is it one of the situations? No. So step 3, is the benefit more than 50,000 or 10% of sale consideration, that is 2 lakh? Yes, the benefit is more than 2 lakhs, so 4 lakh. Will it be taxable under IFOS? Yes, the entire 4 lakhs. I hope you understood why, guys, because he is getting a 24 lakh rupee house for only 20 lakh. So this is 4 lakh. Up to 2 lakh we would be okay. Why 2 lakh? 10% of sale consideration. But this 4 lakh will go under IFOS. Yes, this 4 lakh will also go under IFOS. So this one is done. Sir, if it is less than 2 lakh, will it make it capital gain? Why capital gain? Capital gain is when you sell this house. He is buying this house. How can it be capital gain? Please understand, when he sells the house, yes, no problem. As here, he received a shop, a building of the fair market value of 150 and cash of 50,000 in the distribution from ABC Private Limited at the time of liquidation process. Very good question, guys. In proportion of his share capital, the balance in the general reserve of the company attributable to the share capital is 1,25,000. Guys, a company is getting liquidated and he is getting some assets and some cash in it. So here, will this also be taxable? Yes, guys, very good question here. Please understand, this one is a company in liquidation. He is getting 1,50,000 worth of shop plus 50,000 worth of cash. So he is getting 2 lakh worth of stuff from the company. Will this be deemed dividend, guys? Think about it. He is a shareholder. In proportion to his share capital, he is getting 2 lakh rupees. The balance in the general reserve of the company is 1,25,000. So up to 1,25,000, will it be deemed dividend? Yes. Under section 222C, if you remember, this one was a difficult question, guys. So 1,25,000 is deemed dividend under 222C. Not at all easy, guys. They have questioned you on various concepts here. And last, guys, he sold the plot of land at Jaipur for 8 lakh ATSCP. Remember that plot of land at Jaipur, he got free of cost, but he paid tax at 6 lakh, so the cost is now 6 lakh. He got it in July 2021 and he sold it in March 2022. So short term capital asset. What is the cost? 6 lakh. No indexation, no indexation. What is the sale price? 8 lakh. Transfer, yes, and asset, yes. So simple capital gain is 2 lakh, which is short term capital gain. So I don't think this question is simple from very many perspectives, guys. So this is short term capital gain of 2 lakh rupees. They've given you indexation numbers to confuse you. This is only given to confuse you guys because this is short term. He's got it in 2021 and he sold it in 2022. Perfect, guys. This is how capital gain is asked in the paper. As long as you remember 80 SCP, guys. I want to share a very personal but very small shortcut, guys. How do you analyze these things in the exam? Guys, think like the government. If there is a gain, do they want to tax you? Yes. And they have only 5 ways to tax you. Please remember, asset being sold or converted, etc. is capital gain. You need to have a business and profession for being PGBP. You need to have a job to have salaries. You need to have a house property for income from house property. Everything else goes in IFOS. So keep in mind that and move ahead. And a question like this, which is for 6 marks, which is actually for 8 marks. So yes, they have a lot of marks allotted to it. Even if you don't get something like this wrong, even if you don't get this, then about 2 marks will go away. At least you're playing for 6 marks. Remember, guys, try and step into the exam with the intention that out of 100 marks, 15 marks will be difficult, you will not get. So you're basically playing around for 85 marks. And when you enter that hall with that intention, your paper will be smooth. When you see something like this, which you don't know or probably can't recollect, don't worry, this is part of the 15 marks that you will not know. Yes, that's almost been my time today. If you have any question, I'm here for them. Otherwise, guys, I'm going to see you tomorrow. Guys, tomorrow is the 17th, 18th and 19th, 3 next days. Let's set up the agenda for at least tomorrow. Guys, tomorrow we'll be doing a chapter which is called deductions. We'll be doing a chapter called salaries, but salaries I'm only going to be touching upon the more important parts. I don't want to do salaries. I only want to do the part which I feel is important from exam perspective. Deductions, I want to focus all my energies on, and if time permits, we'll also get into TDS, TCS chapter. That is tomorrow's agenda. Day after tomorrow, guys, we will do TDS and TCS. We will continue advanced tax. We will do return of income and we will do computation of income. And the last day, we will solve. We will do amendments. We will look at some recent questions, maybe some MCQs. That is a day to play around and to get a very nice gift wrap on the gift called DT. Alright, so that's the agenda for now. Anything, I'm here. Otherwise, good night, guys. Sleep well so that tomorrow you're fresh for another new session on DT. Thank you and good night, guys. Here for any questions.